All right, really quick, let's go to our sector spotlight. We're just going to breeze through these and see if there's any glass half full here, right? So let's start with the industrials, the XLI. I mean, it led the entire market lower yesterday, have been getting beaten up so much, but I'm hearing a lot of statements about oversold conditions, a lot of analysts trying to look to buy certain names. What's the chart saying?
Well, this is important because this shows you a head and shoulders pattern that is working and is paying the shorts with follow through. So if you look at the XLI, you will see this actually triggered and worked. Look at this pattern here. Left shoulder, head, right shoulder, obviously looks kind of the same. Broke this neckline, and look where it went to. That's a big move. That paid some shorts, and that, you know, people got out right around here on this wedge, they did fine. We're at the measured move. I was talking about hopefully they covered their shorts yesterday. It really goes down to here. Sometimes what you do is you see a move back to retest the neckline, which gives people a way out or people a way in short, considering look where it came from. So this is a pattern that actually worked, you know, to the downside, which hasn't worked in such a long time.
Right. All right. Let's go to the Homebuilders, the XHB. So, you know, what's interesting is that construction spending grew slightly in June, which was kind of a positive, but only because of private non-residential construction. So I don't know how supportive that is for the long-term economy there. All right. Tell me the chart on this one and how's it acting?
This also, they all look similar. It's crazy. Another head and shoulders top that triggered, that paid people who played this strategy. Look at the XHB. You will see very similar. Oh my goodness, look what we got here. Another head and shoulders pattern that triggered through the neckline and reached, you know, pretty much its measured move as well. And that's why I'm trying to get everyone cautious on the spiders, because why can't that happen?
Right.
Look what happens when it goes, it accelerates. And that's a nice pattern that makes sense to technicians.
And what about the semis? Are they worse than these charts?
The semis hasn't been as extreme, but it too looks pretty similar, and it has some more room to the downside. Look how it is under the neckline, heading lower. Maybe you see a little bit of a retest back at the neckline if we get an oversold bounce, but then you have to watch that area because that area could be a place to short again for a move lower. And look at the size of this head to the neckline. That's not even close to where this move is measured to.
I just really want to check in on the retail real fast. RTH, we talked about that the other day. Is that holding up any better?
Last I looked, it was not, and if you look at it right now, you will see that it broke its 200-day moving average. Not the same type of pattern, but it's at support.
Okay.
This will be a very important area to watch right around here to see if it could actually contain this down move. You have about 104, and then you have that
Gotcha.
Japanese area around 102.
All right, let's go to the Qs. Let's go to the Qs. They were holding up pretty well. How about now?
The Qs are coming into the 200-day. Technology has been the place to be for relative strength, but they play catch up really quick. That's why we tried to show you some signs that you have like a line in the sand to get out. And last time we looked at the Qs together, I showed you this ascending, I showed you this ascending channel right here, the ascending channel that broke right here to the downside. This took that momentum trade off the table. So if you were trading for more of momentum, this was your last exit, you know, to get out of a core, and now we're coming into the 200-day. Let's see if it tries to hold it the first time, because usually the 200-day holds the first time, like we saw in the S&Ps early in the week, but then once it hits it a few times, it just slices right through as well.
Let's take a look at a trade that actually is working. I swear there is one, but first we're going to actually take a look back at a very bullish call that Scott made on CNBC and how it's actually panned out. Take a listen.
Hey Mark, I have something for you for next year. Okay, watch gold. Okay, I'm making a bold call on gold that I think it goes over 1,500 an ounce next
year.
You're gonna cry. On 1,500 an ounce.
1,500 an ounce.
Yes.
There you go. You got a lot of heat for that call, Scott. So we want to go to gold because we're at 16.75 is an intraday high. My gut is that we're going to see some kind of pullback at some point because we're really overbought. But then again, I mean, if people are really scared, they have nowhere else to go, and we could see 1,700.
Well, you know, that was in 2008 of 1,500. This year's thesis was 1,800, above 2,000 if things get really crazy. Last time we spoke, I think it was trading around 1,600. That was the first time I'm like, you could actually still buy it here. And I was actually buying it just in case a deal didn't get done, but a deal got done and it still worked.
Yeah.
So it's like gold is working for any which way, which gets me a little bit more conservative, that you have to take some profits into the emotion. If you look at the chart of the GLD, you will see that we just started to extend yesterday, okay, and we're opening up today. This is not a bad area considering we're away from all these moving averages to sell some. We have calculated entries. This was one of the core entries earlier in the year when we took out those previous highs back in April. And then this was another entry, in July when we took out this previous high, and now we're extended, opening higher. Take some off the table, but make sure you hold some, especially if you have a portfolio for the longer term we've been talking about 10% in gold no matter what.
And not to mention the fact that we're heading into a very seasonally strong buying period that starts in late August that goes through the whole fall. So you definitely want to be on board with that if you want to be on the gold trade.
Yeah, because sometimes you have these blow-off type moves. So this could be the beginning of one, but I would still rather you take some in, take some off, and hold some just so you could trade it and feel good about taking profits into extensions.
All right, and we will be back with some fast ways to make some cash right after this.